Right. So crash 500, this is the daily time frame. This is the daily time frame. And from last week, we actually saw that we're actually sort of like ranging. Then after ranging, we broke out to the downside. Then we shoot up. Like the range that I'm talking about is something like this. Was playing in one zone, broke to the downside, then eventually went up. So, but overall, our main concern right now is to identify the current order flow on the daily time frame, right? So the current order flow on the daily time frame, as I said, how do we identify order flow? We simply look by the swing lows and the swing highs. Are they being broken or what? So that's the swing low there. Swing low was broken here. That's a break of structure. This is what we call a break of structure. So when there is a break of structure like this, which is the swing low was broken, it means where is my lower high? My lower high was this. My lower low was this one, the swing low that was broken, right? So now, as I said, before we identify the next new lower low, we need to look at the shift in market structure. As we're dropping lower high, lower low, lower high, lower low. This is internal structure now. Lower high here. We came and broke this lower low here. Lower high, lower low. Came back to the same high, lower low. So now we have, according to internal market structure, now we now have this lower low because it's lower than this one, right? So if it's lower than this one, this is our lower low. But now what we want now in internal structure, we just want to see the shift in order flow in internal structure. Once internal structure shifts order flow, for example, here it's still a bearish order flow. It was still a bearish order flow. Internal structure was also still, external structure was bearish as well as internal structure was also bearish. So following market structure like this, we actually see where the internal market structure, where it was actually broken. It was actually here on this zone here, right? When this internal structure lower high was broken. So that one now is what we call an internal structure change of character, like this. Internal structure change of character, right? So that one now, what does it simplify? What does it signify? It signifies that what we are now focusing on right now is buying opportunities. Buying opportunities are the ones that we're focusing on. And where do we expect the buying opportunities to reach up to? That's where we use our Fibonacci point A, because this is now our lower low. Why is it a lower low? It's a lower low when it breaks internal structure like here, when we have an internal structure change of character, like the same as here. When we had this internal structure change of character here, right? This is what qualified this level to be a lower low. Same here, this one, if you check here as it was going, there was no internal structure change of character. Never happened here, never happened here. It never happened here, never happened. Meaning all this while, cells were still dominating. Same here, it tried to break here, it failed. So it means cells were still dominating. Cells were dominating. So right now, after the internal structure change of character like this one, after it has happened, it means buying opportunities are now in control when that internal market structure is shifted from bearish to bullish. So my focus for this week on crash 500, I'm simply focused on the buying side of things because of what has actually happened on the daily, because of this shift or this change of character that I'm actually seeing, internal structure change of character that has actually happened on the daily. So how far do we hold the buys? We simply look to the left. Looking to the left, that one at the top there, the swing high there at the top, that one will be our ultimate target. Ultimate target meaning if ever it really wants to push all the way to that one is the final target. But I don't really think it's going to go all the way up there. Then we also look to the left. We identify supply, demand, order blocks, support and resistance, blah, blah, blah. So this is my supply there. I also can see that I have this supply, which is also an order block here. That's also a very strong one here. So these are the strong levels that I'm identifying. This is not to say that there is no any support and resistance, and they are support and resistances, but obviously, as I spoke, that support and resistance, it also varies in terms of how much effective it's going to be. It varies as well as to, for example, supply and demand as well. It also varies how strong a supply and demand is. If you check all these other levels here, they are not so strong as these levels that I just marked. So these levels that I marked are the major levels. If you check also, if you put our Fibonacci from our highest point, point A there, to point B here at the bottom. So if you check now, my first major zone, 61.8. 61.8, that's where also my major zone is. If you check, that's actually double confluence. So it's a Fibonacci retracement as well as a supply as well as an order block. 3 confluences already, 3 major confluences already. So meaning that would be a very good target for our buys. So Crash 500, my focus right now is on buys, in as much as I saw some selling opportunities that happened, obviously, yes. But my main focus is the buys, because I'm anticipating it to push way much higher. So now, before buying, where do we get the buy entry now? That's the next question now. Where is our buy entry? Our buy entry, I have this demand here at the bottom. It's also close to this fair value gap that happened here. So now, after this, as I said, after every change of character, either we get a pullback, if ever the market had not retested any demand at the bottom, the market will pull back. For example, here on this change of character here that happened here, look at this demand, the market pulled back. So there was no need for this market to come back down. So this demand here, if you look at that demand now, this demand, the market created the demand, came back to retest before establishing the internal structure change of character. So there was no need for the market to come back and tap into this demand, because already it had retested it already. So there was no need for it to come back. Here there is a need, because this demand, it was just broken like this. We established the demand, the market broke, went up, never came back. This candle, if ever it came and touched here this demand, there was no need for this market to come down as it is doing. So right now it's actually coming down for the specific reason of retesting that demand. So as I said, on the demand zone, that is where the majority of the institutional buyers or the big players are buying. That's where they prefer to buy from. So meaning they are simply coming back to collect some of their guys there. Once they collect some of their guys, boom, then they fly. Price goes all the way up. So in doing so, there are a lot of retail traders right now that are actually being manipulated. I will show you how they are being manipulated. I will show you how they are being manipulated. So around that zone, that's where we're going to be getting our buys. Obviously, we get our entries on lower time frames, 15 minute, 30 minute. On 15 minute and 30 minutes, that's where we're going to get our entry. But this is just an example of where we are expecting to get the entry. So once we enter there, we hold all the way to 61.8. So this is a trade that you can actually hold for the entire week, holding one single trade, which is the buy for Crash 500. So this one is, to me, it's actually a high probability trade, because everything is clear now. Everything is clear. The buys now are much more safer. The buys now are much more safer. Last week, yes, the buys happened, but these buys, they had no higher time frame confirmation. Yes, they happened according to lower time frame confirmation. These buys, they happened, but they had no higher time frame confirmation. But now we now have a higher time frame confirmation. When you now have a higher time frame confirmation, it means those buys are going to now hold for long. So meaning, once you get the pullback there, we're going to enter our buys there, hold all the way to 61.8. That's the first target. Second target, 78.6. That's my second target. So basically, personally, I'm going to hold all the way. And if you check what I spoke about in the market structure webinar in the private group, I said, if I really want to maximize, for example, here already you now have lower high. This is a higher high because it's higher than this one, right? You can follow market structure. If ever you really want to maximize, you can follow market structure up until the point where market structure is violated. Up until the point where market structure is violated. What do I mean? Violated up until when this internal market structure is violated. When you see, for example, this higher low, when you see a higher low being broken, that's a violation in internal market structure. That's when maybe you can decide to say, hey, I'm now coming out of the buy. Obviously, you would have made a lot of money going up there. So Crash 500, that is a high probability trade. High probability, it's high probability because of the higher time frame confirmation that we now have on the trade. A trade that you take without any higher time frame confirmation, yes, that trade can be a winner, but for a trade to be a high probability trade and a trade that can last for long, it has to have that higher time frame backup. So this one is a higher probability trade that we're all going to take the signal. I hope I'm going to give the signal, but even if we don't give the signal, we have done the analysis, we have done the projections, and you know where we're expecting to buy and where we're expecting to hold. So when you see this market moving in your favor, don't be quick to come out. Like the problem that I've seen with most unconsistently profitable traders is the fact that when they're in a winning position, they anticipate that it's going to turn around and be a losing position. But when they're in a losing position now, they hope that it will win. You see now the danger. The danger when they are winning, they don't expect the trade to continue going their favor. But when they are losing now, they hope that the market will come and go their way. You see now the difference between winning and losing traders. It's simply the mentality. So once you shift that mentality and make sure that when you're in a winning position, make sure that you have that positive attitude and actually expect that market to go your way. So that will be our entry point for Crash 500. Obviously, when we enter, as I said, we enter on all our time frames, 15, 30 minutes, 1 hour, it's fine. The purpose of entering on lower time frames, I think I mentioned it over and over again, is simply for you to have what we call a sniper entry. If ever you want a sniper entry or an earlier entry, or if you want a smaller stop loss. So here, looking on the 4 hour, you see that the demand on the 4 hour now, the demand on the 4 hour is actually down here. So meaning this market can actually drop. So dropping down here, it will still be within the same zone on the daily. So this is the 4 hour demand. So if you check if that 4 hour demand is still within the daily demand. So meaning our entry now, we can actually shift it here. It's still confluencing with what we are seeing on the daily. If you see already now the stop loss is actually now reduced, and the risk to reward is now actually higher. So that is the purpose of entering on lower time frames. So this is somewhere where we are going to be expecting our entry here on this 4 hour demand there. So this one, I can simply shift it down here and put it here on this 4 hour demand, just like this. So that's the zone that I'll be expecting to buy Crash 500. That's the trade that personally I'm waiting for. Then, just to show you a smarter way of trading, let's say you wanted to catch these sales that are happening now, right? This is how you do it. How you do it, you simply go to lower time frames, because now that one is simply a pullback now. According to higher time frames, it's simply a pullback of what is happening on the higher time frame, right? A pullback of this move here. It's simply a pullback. So when you're trading pullbacks now, what you simply do when you're trading pullbacks, you don't need to go to a higher time frame to get the confluences or the what. When you're trading a pullback here, especially this trade, you simply were going to either go to 30 minutes or 15 minutes and identify the internal change of character, because the internal change of character now, because according to lower time frames, this will be an uptrend, higher highs, higher lows, higher highs, higher lows, blah, 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 higher high, higher low, higher high. So according to lower time frames now, this down move here, obviously it's a shift from an uptrend to downtrend according to lower time frames. But on the other times, obviously, we know that it's still one trade that is now going up. So according to lower time frames, you could have actually entered this sell in this way. 15 minutes or 30 minutes, you go there. Once you go to 15 minutes or 30 minutes, you identify the shift in internal market structure or the change of character, right? If you zoom in, this is 15 minutes, right? After we had that change of character on the daily to the upside, this one, right? If you follow market structure, you realize that we had that higher high, higher low, higher high here. So from this higher high now, we also have these other inside levels here. This inside level, I can say it's an internal structure higher low. That's an internal structure higher low. That one now, it takes now a smart trader to actually identify all of that. Those are things that you might not realize if ever you're not that smart. So if you zoom in, you realize that this internal structure, this one, this internal structure level here, it's actually an internal structure higher low, because as it was going up, 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 up. So after this break here, after this break, so that's an internal structure change of character, meaning once you now have that internal structure change of character, the market has to go down. I've always told you this. So the same way this lower time frame is going down, is the same way also the higher time frame we're expecting that downward retracement before we go up. So after this one, what you simply needed was a pullback. So as I was saying, once after we had this internal structure change of character, here I'm simply showing you how you could have caught the sell, which is simply a retracement according to what we've analyzed, right? So here you wait either for, if you check this demand or this order block, it was retested. So there's no need for the market to come back there. There was no need for the market to come back there. Even if it came back there, you could have actually sold here. So after this break here, which actually happened here, after the market break below this level, which was here, after breaking below that level, you wait for a pullback into a demand, pull back into a supply, order block, fair value gap, or any Fibonacci retracement level. For example, here I can see that this is a fair value gap from this zone to this zone. This is a fair value gap. So that was where it actually retraced. If you also put your Fibonacci retracement, you realize that's a very, very key, significant level as well. So all those were confluences that you could have added to that trade. That's actually 50%, yes, 50% Fibonacci retracement. That was, so here, first confluence, this change of character, internal change of character. Number two, pull back into 50%. Number three, fair value gap. Those three confluences were more than enough for you to take this sell. But you taking this sell, you know that it's a pullback according to what you saw on the higher time frame. And you know that the target you're simply using, you can simply use that higher time frame target that we saw, which was that higher time, that daily time frame demand, or you can also use lower time frame target. So here, when you enter there, your stop loss, you can simply put it tight, just above the fair value gap. That's how you put tight stop losses. So entering there, you simply drag your target now, you simply drag using higher time frame targets, or simply using lower time frame targets, supply, demand, order blocks, whatever, blah, blah, blah. But if you check this trade, it was actually a trade that was worth taking. It was just that I wasn't on the chart. I wasn't on the chart this time. I wasn't on the chart by that time. But this was actually a trade that if ever you really apply whatever we teach, you were actually supposed to catch that sell. You're actually supposed to catch that sell all the way, all the way. So someone can actually hold this sell all the way to that daily demand that we're expecting to start buying. That person is actually now trading smart, because they are catching the sell, which is a pullback, and they also catch the buy, which is the main move. Catch the pullback and the main move. That's a smart way of trading. So, but however, that is how you could have caught the sell. That was how you could have caught the sell. There are so many other confluences that I can add. I can put trend lines. I can put all those things. They are correct. They are not wrong. They are correct. I can also draw a trend line from the bottom here. It's just that when experience increases, when you grow, when you increase in experience, when you grow and increase in experience, there are things that you might just not put, not because you don't know them, but because you have grown and matured in the game long enough. So, for example, this is a trend line. Let's say all you know is a trend, or you know trend lines only, right? You could have applied that trend line, simple trend line break and retest already there. Personally, on my side, I would be having more confluences if I put that trend line. I'll be having the trend line, the change of character, internal change of character, internal structure change of character, the fair value gap, and the Fibonacci retracement. 4, 4, 4. Those are entries, right? Let me tell you this secret. Those are the entries that you see me going aggressive, you see me going aggressive. The entries that you see me going aggressive, those are entries that will be having a number of confluences like this. Those are the entries that I go aggressive. I go aggressive. My stop loss, I know, is very tight there. Those are the entries that I go aggressive. After all these conditions have been met, after I have all these confluences, I can enter aggressively. They obviously also looking at my capital size. I enter aggressive because there's an aggression that is too aggressive for the account, whereby just a small tiny move, it closes all the positions. No, that's not the type of aggression I'm talking about. I'm talking about an aggression that also leaves your margin level at a position whereby even if the market fluctuates before going your favor, you'll still be in the position. So those are positions where I actually go aggressive. Personally, if ever I was on the chart by that time, I was going to go very hard and aggressive. Also, it was a signal that I was gonna give. But I'm simply showing you to show you that even if you see the same way I'm analyzing right now, even if you see the same thing on boom 500, crash 300, boom 300, if you see the same thing the same way, you can enter your trade without even waiting for a signal. This is the reason why I'm simply showing you all these things. I might not analyze every instrument for you. I might not analyze to analyze VIX 100, VIX what, boom 500, boom. I might not analyze everything for you, but that one instrument that I might analyze for you, you simply master the art of analyzing. Once you master that art of analyzing, you can apply it on any instrument. That's why I always tell you that focus on very few instruments, 1 or 2 or 3 maximum. 3 maximum, it's fine. 1, 2, 3, those are fine. Focus on those ones. Focus on those. Why? Because your focus is actually concentrated in one position. And when it's concentrated in one position, you will never miss such good opportunities like these ones. Unlike when you are trading 10 instruments, 5 instruments, your focus is diverted. You miss an opportunity there. Then when you go back there, you miss another opportunity here. When you miss here, you go back there. So you'll be missing everywhere. You'll be missing everywhere, trying to chase so many things at once. So that's why I always tell you, if ever you grow enough and you mature enough to an extent whereby you focus on 1 or 2, there you're now a master, because already there you have actually mastered your own art of emotions, whereby emotions telling you to be everywhere. You've mastered them, to place them in one area. Already you're on your way to becoming a master. So that's actually one way you can actually be consistently profitable. Make sure that you focus on the less the number of instruments you focus on, the more you're going to master. The less the number of instruments, the more you're going to master. The less the number of instruments. It's not about how many instruments you're trading. It's not about trading many instruments. That's not the way to master. That's not how to master. That's not how to master. So I'll just go to US 30. Then the other instruments, I think I will do another video after this Zoom session. Then you'll just see them on the channel. So just a quick rundown on US 30. Just a quick rundown on US 30. So if you have any question on Crash 500, you can type the question in the chat there. If you have any question on Crash 500, you can type the question in the chat, or if you understood, you can just say understood. Right. So this is US 30 weekly time frame. Weekly time frame, we do the same thing. What we need to identify, we need to identify order flow. Where is our order flow? Where is order flow? Where is order flow according to the weekly, right? That is what we need to identify. So looking at the weekly, you realize that to the left here, we broke this swing high here, right? After breaking this swing high here, that's a break of structure, right? Break of structure. Where is break of structure? Right. We broke that swing high here. That's a break of structure, right? After breaking structure, it means if ever we follow internal market structure, we want to see where it's going to turn. Where it's going to turn, that is going to be our higher high. Higher high, higher low, higher high. Came and broke now. So this now is my higher high after this one. So this is my high. This is my higher high. Right. So this one is my low, obviously. So where is my lower low? My lower low is confirmed by breaking internal structure. So we need to see a level where it breaks internal structure. That's going to be our lower low. Our higher low, I mean. Our higher low. So once we identify our higher low, it means we have identified an entry point, a zone where we can actually start to buy long from. Can we look out for next short entry on C5? Okay, next short entry, that is if ever we get a pullback either on 30 minutes or 1 hour. If ever we get any pullback on 30 minutes or 1 hour, we can actually get some selling opportunities. I'll actually do the analysis after the Zoom and see if ever we get a pullback on 30 minutes or 1 hour, we can actually get in the cells as well, because it on 30 minutes or 1 hour you can realize that it just pulled back into any supply or into any fair value gap. So which it might do. If it does, we're actually going to join the cells. Then we hold all the way to the bottom before we start buying. So now this is my higher low. We now need the next higher low. So this is a higher high. So dropping down, lower high, lower low, lower high. We broke here, lower low. So after this lower low now, we broke here now. This was broken. Let me really see. Was that really broken? Was that really broken? Let's zoom in. Was that really broken? Was that really broken? Because most of the times it actually plays around and pretends as if it broke, yet it didn't break. So most people, that's where they are caught up now. When they think it's a breakout, yet so it kind of closed above. So we can say that's our internal change of character, right? So once we now have that one, it means we now have a higher low, right? Once we now have a higher low, it means we now have a ground for, or a foundation for our buys. So that there at the top there, that's my swing high, which is the target that we are looking forward to. Swing high. That's my swing high here, which is the target that we'll be looking forward for our buys for US30. I'm going to do another video. You'll see this market is actually going to hit that swing high. But now, where now? Is it going to? So now, if ever we now say this is our higher low, according to the weekly, because of this internal break, right? So meaning, after we now have this internal break, remember what I said, we have to get a pullback into a fair value gap or a demand. For example, I have this. What is this? There's a demand. Demand here was broken. So it can come and it can actually drop all the way down here before going up. That's a fact. Or there's also another fair value gap here. Two zones that way I can actually look forward for US30 to drop into before going up. So even at the top there, we can actually see that we have a resistance, right? That is also the confluence that we can use, that if ever, let's say it breaks the resistance, that's when maybe we can actually enter the buys. But if ever it doesn't break there, it means somewhere it's going to drop into those levels that I marked there at the bottom before shooting up. Because doing that, it will be taking out a lot of retail traders. A lot of retail traders, they will be jumping into buys, and it will be wanting to take them out, fake them out with the sells, then boom, go up. So one can even put a trend line. You're not wrong, you're correct. There's nothing wrong about trend lines, as I have always told you. This is the trend line here. So according to the weekly, the smart way now of entering the trades on US30, according to the weekly, if ever we can get a break below the trend line, that would be a good confirmation to enter our sales. Break below the trend line, sells. Break above resistance, buys. But basically, if you heard me correctly, I'm simply expecting it to come down before going up. If ever you heard me correctly. So if ever I even put my Fibonacci, point A to point B, let's say this one. Or this one. Right, point B, that one. Right, point A to point B, you realize the zone that I'm expecting, 61.8, it's not a coincidence. That's where the confluence part of our strategy comes in. So it dropping to that level, it's a key zone to buy here, as well as this one as well. So between 1 or 2, it's going to do the pullback before shooting up. That is the expectation for US30. That is the expectation for US30. Right. So that is the expectation for US30. That is the expectation for US30. So on the daily, I'm actually happy because this break that we couldn't see clearly on the weekly, on the daily, it's actually clear. That's a clear change of character. That's a clear change of character, meaning the buys are now more in control. But even if the buys are now more in control, you need to wait for the market to pull back into a significant level, like a significant demand or a significant zone before going up. That's a fact that you must always keep in mind. So here at the bottom, the only level that can be tapped here is this demand here. That demand, because it wasn't tapped. This one was tapped. This one, it broke, came back to retest it, which was actually an entry. So those are other entries that you can actually enter. Like if ever you put this demand like this, draw this demand like this, those are entries that I actually enter sometimes crazily. If ever I don't want to analyze, I can simply plot a demand like that. Once I have a demand, once it's broken and retest, and the market retests the demand, and I have other confluences, I can actually enter simply because of that. It's my stop loss below. The market went up simply because of that simple fact. Demand broken and retested. We also had this support. Simple stuff. We also had a trend line as well. So here, trend line, break and retest, support, break and retest, demand, break and retest. All those confluences. Once you have all that, you can actually enter. Those are trades that you can actually go as aggressive as you can be, based on your account size, obviously. Based on your account size, obviously. Don't go aggressive where you don't have all these confluences. Only go aggressive when you have all the confluences.